Good evening, traders and friends. The term implied volatility in option trading, is it sound like a rocket science? Don't worry. Today, I'll tell you a fun little story that will make implied volatility feel like a walk in the park. Imagine a village fruit market where apples are traded every day. So now there is a guy named Ramu who sells apples. Normally, the price of apples stays pretty steady, 10 rupees a piece. But one day, dark clouds start gathering. There is talk of storm coming, roads getting blocked, and apple deliveries being delayed. Even though storm hasn't come yet, people start getting nervous. What if apples become rare? So they start willingly pay 15 or even 20 rupees per apple, not because the apple changed, but because of fear and uncertainty. That fear, that expected change in price due to uncertainty, that is what we call that. So if you turn to the stock chart and options trading, implied volatility works the same way. If traders expect big movements in a stock, maybe because of earnings, news, or market rumors, IV goes up. Even if nothing has happened yet, the expectation of a storm moves the option prices higher. For example, TCS has an earnings report coming up. Even if the stock is calm now, the traders expect a big move after results, so the option premiums, especially calls and puts, become expensive. That is high implied volatility. It is like paying 20 rupees for the same apple just because you are afraid of the storm. Here is a catch. Once the storm passes or earnings are out, and the fear vanishes, premiums fall fast. That is called as IV crush, and option buyers may lose money even if the stock moved a little, because implied volatility will fall, and even though the price of TCS moves a little bit more, the option premiums will not increase. The option buyers will lose money because of the IV. In conclusion, next time when you buy an option, remember you are not just paying for the apple, you are paying for the weather forecast too. That is implied volatility, the market's way of saying, I smell a storm, or maybe it is just a wind. Okay? So, this is how implied volatility plays in the market. If you found this helpful, like, share, and questions,